Hi there, welcome to Finance with Justus. I'm Justus. British American Tobacco is one of those stocks that you either like or you completely hate. I am on the first side. I think BTI has one of the best risk-reward ratios on the market right now. The stock didn't have a good 2023. BTI has mostly declined due to three factors. One, it's debt. Two, of course, the market it's in. It's the cigarette market. Not a lot of people like it. And three, the interest rates. Of course, most of the way that the company returns to shareholders is via dividends. They don't do a lot of buybacks. So of course, when interest rates go up, the price had to come down so that the yield adjusts. Now with cigarettes, you care about two things. You care about the volume they sell, and you care about the price. Cigarettes usually slowly go down in volume, but the price increases. At BTI, the volume is mostly stable. They had a one-off decline in the US. This was not just them. The entire cigarette industry in the US had a bad year so far, but overall the group is stable. And even with a flat landing of volume, price increase in cigarettes are crazy. And it's pretty easy to increase the prices on your customers. As bad as it is, they are addicted to your product. They make around 46% in the US, 22.3% in Europe, 16% in Asia, and 15% in Africa and Middle East. And some parts of Europe are also included in that. So they're widely diversified. They also have a 29% stake in ITC, which is the leading tobacco company in India, so they're very widely diversified. So the cigarette business is doing okay. It is not shrinking too much in volume, plus they are constantly increasing prices, which makes the cigarettes just way more profitable. I also like that most of the revenue comes from the US. If cigarettes are gonna be restricted by any country, it's least likely going to be the US. Before you tell an American to stop doing something, they will shoot your roof in. So I think that market is more safe than the European markets or the Asian markets. But they're also diversifying into non-harming products, which is their new product category. Now 16.6% of their revenue is made up by non-cigarettes. While those new categories are not completely profitable yet, they have massively increased in profitability and are going to be profitable in 2024 and are going to keep growing when it comes to margins. The margins when it comes to these new categories are around the same as it comes to combustibles, which are cigarettes. Once they got those onto the market, they will also be a cash cow, just like cigarettes. It will just take a few more years until they become as profitable, but they're already going to start contributing to the company next year. And they are growing at an extreme speed. They're growing at a 33% CAGR. Obviously that will slow down after some time, but it is a very fast growing segment. So overall, we can see the cigarette portion of the business is doing okay. It is not in a rapid decline. It is around stable to slightly growing when it comes to pricing. And the company has a growth engine, which is going to become profitable and is growing at a very fast pace. Fundamentally, when it comes to revenue and profitability side, we can already see British American Tobacco is a fantastic company. Of course, it's not going to be a fast grower like Microsoft or Google, but it is a very stable grower, very recession resistant. Smokers won't stop smoking only because the economy is bad. I'm probably going to mix up USD and British pound for some time, so just so you know, all those numbers which are displayed here, I'm British pounds, but for the valuation I'm gonna use dollars. Now we come to the debt issue at British American Tobacco. They had around $46 billion net debt, now they're down to 38. Of course, why did they have this much debt? It was an acquisition. In 2017, they bought Reynolds, which was a huge acquisition, so they've been deleveraging ever since. They have been speeding it up ever since 2020. They are very well capitalized, they have $4 billion on hand. And if we look at their maturity profile, we can see maybe 3.5 billion pounds worth of bonds mature each year. So we already know this year they could just completely pay it off in cash. So we gotta see, do they have the cash to support the dividend and the debt, or do they need to cut the dividend, for example? We can see they make around 9.9 billion pounds per year in free cash flow, and they pay around 5 billion pounds in dividends. So that is around $4.9 billion to pay down debt, to invest in the business. And if we hear 4.9 billion pounds, that is more than they need to pay down this debt each year when it matures. Well, when I saw a video from Sven Carlin about British American Tobacco, he was very worried about their high debt and how they would be at the mercy of bondholders when they refinance this, or if they can even refinance this debt. But we can see it is not really an issue for the company. Yes, it is a high debt load, but it is a very manageable debt load. And if we look at the revenue, it is also not seeing any decline. You gotta remember, this bump in 2017 is because of acquisition. Ever since then, revenue has expanded slowly. Their free cash flow margins overall are very stable and trending upward. They had a bit of a down year this year when it comes to free cash flow margin because of a decline in the US, but that is probably going to recover as well. So I would say currently the company is in a very strong position. It has its stable business, which is going to keep pumping out cash while growing its new business, which is less likely to get hit by regulations and is also going to be very profitable. Meanwhile, their capex is always staying low. They don't need to invest much into the business. After all, it is cigarettes. It's a very capital light business. $4.9 in free cash flow per share. I expect a 4% growth rate for the next 5 years, 3% for the next 5 years after that, simply because of increased cigarette pricing and new category profitability. They did some buybacks a time ago, but they quickly discontinued that because they saw that they need to deleverage more, which I like. I'm not counting on any share buybacks here, just to be conservative. 10% return, 11 times free cash flow multiple. While this is very low, you gotta remember, cigarette companies are hated, so they're always gonna trade at a lower multiple. Dividend payout ratio of 55%, plus a little discount due to immediate taxes. I come to a fair value of a stock of $51.94 for me. The stock is currently trading at $32, so there's a 62% upside in my opinion. Let's say the growth rate is minus 3% for the next 5 years and minus 4% for the next 5 years after that, and only an 8 multiplier at the end. You're not gonna lose a lot of money. The stock has a very limited downside and a pretty decent upside, I would say. I think it is the best risk-reward ratio in the market. What do you think about BTI? Do you own it? What do you not like it? Do you maybe not like it just because it's a cigarette company and you do not like to invest in those? Write it down below. Have a good day.